Welcome back. The SGX Nifty is indicating that we'll have a gap up 100 points actually. So we'll reclaim almost half of yesterday's lost ground with the gap up itself. But has the texture sort of got weak yesterday, or was it just expiry play? Because we'll find out. Shrikant Chouhan is joining us. He's Executive Vice President at Kotak Securities, and Kush Bohra is also with us for some technical advice. Gentlemen, good morning. Shrikant, what's your view on Nifty and Bank Nifty?
Good morning, Anush. Good morning, everyone. I think, Nifty is in between of the previous range of the corrective pattern. So it is between the range of 18,000 and 17,350. Yesterday, on the day of expiry, we saw some steep sell-off in the second half. So the important level is now 17,450, which was yesterday's lowest level. Below that, we can expect further more weakness. And in that case, the market will validate to the formation of lower top also. On the higher side, 17,750 or 760 would act as major resistance for the market, and above that only we can expect a rally. So today we are opening, I think, in between these levels. Till the market is not crossing these levels, either on the upward side or downward side, we are not going to see any major activity. So maybe for the day, the markets are going to remain in a range, or it will focus more on the stocks, or it will remain more stock specific. But if we see the market is closing above or below these levels, above 17,760, then we should go long. Or if it is closing below 17,450, then we should be on the selling side.
Okay. Kush Bohra is also with us, the founder at kushbohra.com. Kush, this market has been holding on to the 20-day moving average quite well. You think that's something that can sustain? And for the series itself, what are the markers that you're looking at on the index?
Sure. First up, hi Sonia, and thank you for having me on the show. Well, two things have happened. One, there was the symposium which kept the FII positions rather light, and back home we had the expiry. Now, because of this, we saw a bit of a downtick in the markets. But this is not something that's too big a cause of concern. Just to put a data point, 17,500 in the money put. Last week we saw quite a bit of base when the markets were below that, and markets sort of jumped up and conquered those levels. We're seeing a similar action in 17,700 in the money puts, and the SGX Nifty is indicating that we'll be opening close to those levels. So all in all, we remain rather bullish. Even for the day, we suppose 17,750, 17,800 is the target on the Nifty, and for the for the month, 18,000 is something that we could see on the Nifty. 17,500 remains a crucial support level, and that should also act as a stop loss for a lot of long positions.
Okay, let's talk about individual stocks then. Kush, what are you buying and selling?
Sure. First up, Titan. Titan has shown a very strong up move, and 2,500 is a level where the stock has seen some resistance. Two reasons. One, this has been a very strong support zone historically for Titan before it broke down, and there was the expiry hangover, and it had a very strong call base at 2,500. Now with the expiry hangover behind us, and the festive season, we're in the middle of the festive season. Both these triggers will act as a positive. So Titan is the first buy call. 2,500 would be the first target, and 2,550 would be the second target. Here the stop loss is 2,450. The second stock is Go Colors. The stock has been in a decent uptrend, and 1,150 is the resistance. Now the stock has closed above that. The indicator setup is rather positive, suggesting a fresh upside from here. So 1,200 is the target on Go Colors, and 1,150 would remain the stop loss.
Okay, Shrikant, how about you? What would the individual stock ideas be for the day?
For the day, we are specifically going to focus on those companies which have shown a tremendous strength in last few days. BHEL is one of that stock, and yesterday we saw the stock was crossing the levels of 57 with huge volumes. So there we are expecting further more activity. We are expecting stock to move towards the levels of at least 62, 63. So it's a buy at current levels around 57, 57.5 with a stop loss around 54. Also, we are going to create some short positions in the market because markets are going to remain volatile. That's the overall view. So we should look for creating some short positions on HDFC Bank at current levels around 1460, 65 with a stop loss at 1480. And on the downside, we can see the levels of 1420 or 1410.
Okay, all right. Thanks very much for that, Shrikant. We'll take a very quick break here. We'll come back with the pre-opening rates. There's 5 minutes to go for that. We'll also have Murtuza